The Reserve Bank has cut interest rates by 25 basis points, saying that while inflation appeared well contained, the medium-term outlook was more uncertain than usual. Governor Lesetja Kganyago's noted that the decision also considered external pressures, the global monetary environment and domestic economic performance. The reduction takes the repo rate to 7.5%, and that decision was split with 2 of the 6 members of the MPC voting for an unchanged policy rate.
So are we nearing the end? Well, we'll have to define the end. Remember, in this environment, you would like to be in a position where monetary policy is neither stimulatory nor contractionary. That means the policy rate being at its neutral level. And all that we are saying is that we have gotten closer to that neutral level, and we will leave it there.
Glencore has achieved production guidance across all its commodities for the year to end December. That's after delivering a strong operational performance in the second half. The acquisition of Elk Valley Resources helped boost steelmaking coal output, while copper production ticked up due to a recovery at the firm's Peruvian and Tapaque mine. The group will release its annual results on February the 19th, which will include updated guidance covering production and capex for the 2025 to 2028 period. Sirius Real Estate has secured a new debt package at its Saarbrücken business park in southwest Germany. The owner and operator of branded business and industrial parks in Germany and the UK says it's agreed to a 5-year loan of 13 million euros. The business park is mainly comprised of offices. By September last year, it had occupancy of 78% and was producing a net operating income of close to 3 million euros, reflecting a 20% improvement since it was acquired in 2018. Eskom's posted a surge in half-year profit. That line items come in at 17.8 billion rand, which is a significant improvement from the 1.6 billion rand reported in the prior period. This reflects a turnaround in operations, which includes the extended and ongoing suspension of load shedding. Sticking with Eskom, it's set to hike prices. The state power firm secured approval from NERSA to increase tariffs by 12.7% from April. That percentage is well below the 36% that Eskom had requested. NERSA has also approved increases for the 2 financial years that follow, which allows a 5.36% hike for 2027 and one of just over 6% for 2028. And money supply and credit ended the year on a weaker note. Annual growth in M3 moderated to a 4-month low of 6.7% in December. That's from 7.8% the previous month, and comes as the rise in net foreign assets and net claims on the private sector was offset by sharp declines in net claims on the government sector. Meanwhile, private sector credit extension slowed to 3.8% year-on-year during the month. That's the lowest since July. The slowdown was almost broad-based, but the most significant drag came from the bills and investments category. Further afield, Tesla says it's on track to roll out new, cheaper electric vehicle models in the first half of 2025 and would start testing an autonomous ride-hailing service in June, enthusing investors and overshadowing quarterly results that fell short of Wall Street expectations. Here's all the detail in this package report.
Tesla says it's working on delivering more affordable cars in the first half of 2025. That's after its quarterly results disappointed Wall Street. In a call with analysts and investors, CEO Elon Musk said lower-priced models and self-driving vehicles would underpin the EV maker's financial future. Shares in the firm rose as Tesla said it was cutting costs and working on new cars. Last April, it abandoned plans to build a cheaper vehicle for the mass market. But rivals such as China's BYD and BMW and Volkswagen in Europe have launched their own cheaper models to capture market share. Musk also said the company would start testing its self-driving taxi service in June. He said the robotaxis would first hit the streets in Austin, Texas, and later in the year in other states, including California. The positive news came after a lackluster fourth quarter for Tesla. Profit margins missed estimates, landing at just under 13.6% in the fourth quarter. That was down from about 17% in the prior three-month period. Revenue for the October to December quarter hit $25.7 billion, compared to estimates of around $27.3 billion. Tesla says it expects vehicle business to bounce back to growth this year after a drop in 2024.
Meanwhile, Shell has reported a decrease in its fourth quarter profit, missing estimates due to lower refining margins and LNG trading, while announcing a $3.5 billion share buyback and a 4% dividend increase. There's more insight in this report.
Shell reported a drop in fourth quarter profit on Thursday, missing estimates due to lower refining margins and liquefied natural gas trading. It also announced a $3.5 billion share buyback and raised its dividend by 4%. The oil and gas giant reported a net profit of around $3.6 billion for the quarter ended December 31st. That was down from $7.3 billion a year earlier and short of the $4 billion expected by analysts. For the full year, Shell's 2024 profit fell 16%. Refining margins weakened globally due to reduced economic activity and new refineries opening in Asia and Africa. These weaker-than-expected results add pressure on CEO Wael Sawan, who has been focusing on cost-cutting and pivoting back towards oil, gas and biofuels, its most profitable sectors, and away from renewable power. Shell is not alone in its profit decline. Fellow industry giants have experienced the same throughout 2024, despite posting record earnings in the previous 2 years. That's as energy prices stabilised and oil demand weakened.